Alright everybody, welcome back to the Simple Markets channel. My name as always is JB, and today we're going to be going over how I predicted one of the largest moves in gold history. So as you can see on my screen here, we have a 65% bullish move on gold, and it really is one of the most impulsive and fastest moves gold has had in history. And I'm going to break down in detail how I called it out. And as always, I come with receipts. We're going to take a look at an old video that I posted. It was actually part of the old course content in my original server, so the video was roughly 2, if not 2.5 years old now. Please ignore the terrible audio. I know it sounds like I'm speaking out of a toaster, but if you guys can get past that part, you can see the value in the video, and then we're going to talk about how I made that analysis. So without further ado, here is a short clip of that video.
So now this protected low is expected to hold. There's plenty of liquidity before it. So what can you kind of expect here is that we are going to come down, sweep this liquidity, come into an area over here near this protected low, and then maybe come and make a new high.
Alright, and as you guys can see, that video is actually from April 6th of 2022, so we're going on about a year and a half since that video was posted. And it was part of my original course content on structure and liquidity and explaining on a real chart how structure and liquidity both work in unison to create this analysis that I obviously predicted. So to briefly recap what I was saying in the video, as you can see, the red line here shows the structure in the markets. So we're seeing lower lows and lower highs forming in gold. And then of course we see a shift in market structure. And that is why I show now a green line representing the bullish structure that we have now on gold. So we're seeing higher highs and higher lows forming, and then eventually break that overall high in the market, creating a large break of structure. So when that occurs, we have some consolidation in a period of slow price action. We talk about plenty times consolidation represents liquidity, and liquidity is something that institutions will target so they can drive price in their intended direction, meaning that a lot of orders rest below this gray level, which many of you may know as support. So when the majority of traders are seeing a level as support, a lot of orders are now being placed in the market here so that institutions can drive price from this wick through those orders, converting them into buy-side positions and then pushing price substantially higher, all while keeping that structural range intact that we have drawn from this low to this overall high. So in the video, you may have heard me refer to it as a protected low, and to me, a protected low is just a low that sweeps liquidity, is very impulsive, and then breaks structure. I don't like to overcomplicate it, but I do want to mention that because the general idea is that we should maintain above this low that was put in the market, and in doing so, we should take this liquidity at the same time, and then after that occurs, we will see a very strong bullish run towards the target high. So that's the general analysis that I was going over in that video. This image was from April 6th of 2022, so now let's jump onto a live chart and look at how gold played out in the present day. And of course, you may have seen this in the beginning of the video, but this is how gold played out in the present day. Very, very similar to what we talked about. So as you guys can see, this here is April of 2022 when the initial call out was made. And then we have these same key factors here with a protected low, a break of structure in the market. We have the support zone that we initially talked about with the liquidity resting below. And then this dot here represents the protected low that I talked about on the lower time frame. So once the prediction was made here, we expected that from this general wick, we will see price run through the liquidity, stay above this protected low, and then drive price significantly higher. Now, of course, a 65% move is enormous in any market. I've made similar callouts on moves like this on SPY or even silver, which you guys can see in my recent videos. But the general idea remains, when this wick was put into place, the expectation is price is going to be driven through some form of liquidity, because in order for price to move so heavily bullish like this, there needs to be a lot of sell orders in the market, and in order to do so, breaking below a support level creates a lot of resistance sellers who now say, okay, the price is going to go lower because we broke a great support, so they're all entering on their sell positions. Now this goes for the masses of traders like you and I, but this also goes for institutions as well who may trade support and resistance type strategies and have a lot of capital invested in the markets. If you want to make a bullish 65% move, that requires a ton of capital, and there needs to be a ton of sell orders on the other side of the market so that you can actually buy those sell orders to create a move like this. So in doing so, the resistance traders are now getting into the market with a lot of sell orders. Also, the people that bought at these general lows of the support if you are unaware, any buy orders that have a stop loss in, meaning that if I bought price at this level, expecting it to go higher, but it does not, as price goes lower and hits my stop loss, I now have to sell back the shares, or in the case of gold, the units of gold. I have to sell those back, and that is how a stop loss actually works. Once again, represents a lot of sell orders in the market. So if large-scale institutions are assuming that gold is going to go higher from here, they're putting their stop losses below the support level, expecting that it won't break. However, as we know as smart money traders and traders that understand liquidity, we know that all of those sell orders now are resting right below those lows. So a large-scale institution that may want to drive price higher is going to actually push price through them, convert those sell orders into buy positions, because of course you can't buy $1 million of gold if someone isn't selling that $1 million of gold on the other side of the market. And in the case of institutions, it's not a 1-to-1 ratio, of course. The institutions may be buying $1 million worth of gold, but there could be over 100 or 1,000 different traders here with all their small positions adding up to that $1 million value. And that is the intention of what these institutions do when creating lows and highs in the market like this. These consolidation periods are intentional so that a lot of orders can compile at these areas, and then they can now buy up those sell orders to drive price where they want to in an aggressive manner like we see here. Now, coupling that with the protected low that I talk about here, one of the things that makes this protected for me is that it grabs liquidity. It's tough to see on the monthly time frame, so we can drop a little bit here. But number two is the impulsiveness and the high volume that was created. So if we take a highlighter tool here and we mark our higher highs and higher lows, we can see them working all the way up until this eventual high that is formed at the very peak of gold before the retracement begins. However, notice the impulsiveness of this move down here, very similar to what we talked about institutions needing lots of orders. In order for a large-scale move like this, there needs to be a lot of capital that is sold off very, very quickly in a market, leaving a fair value gap on the way up, roughly where I drew this dot here. And as you can see, that is inevitably what gets filled before the bullish move that occurs after it. But the key to understand here is this very impulsive move here in a strong sell-off that creates this large bullish move right after. This is what many traders may know as a demand zone. And when a demand zone forms in the market, institutions are selling very heavily to take traders out of the market and then convert their orders into strong buy-side power. And as that is occurring, the institutions will have to come back to mitigate those positions in later time, which we can see occurred here before the bullish move occurred after taking the liquidity as well. All of these things paired together make a very strong prediction and explain why I was able to so accurately predict this very large-scale move on gold. And in fact, it is the largest and fastest move that gold has ever had in history. For those of you new to the smart money space, feel free to share this video with someone else and maybe they can get a better understanding of how these markets intrinsically move. And if you have not already, please subscribe to the channel and like the video. I appreciate the interaction a lot. I love the comments you guys leave on videos as well. And of course, if you want to reach out to me with any questions you have, my Discord is jblaisdell729. I leave it in the description so you guys can go and look me up and ask me any questions you want in DMs. But that is going to be all for this video. I hope you guys appreciate the analysis. Thank you all for watching, and I will see you guys in next week's video.